Walgrave, Todd Ricker, Craig Nestor, live, local 855-835-8500, or online at coveryourassets21.com. Thanks to our special guest today, Jesse Keybort from Daniels and Wymore. He's been a fun little addition to the conversation here. And Craig, you wanted to go back to just something that we were talking about last segment.
Well, if you really want to save your house, it comes down to two choices. You can do it yourself. And you can do a lot of things yourself. You can provide a tonsillectomy on your daughter yourself, or you can bring in a professional. I mean, at some point, you have to decide, do I want to do this myself, or do I want to use a service that is free, provided by the county, or do I want to bring in someone that does this for a living and wages war on your behalf? Jesse, you have a significant level of performance and success and results here, and it's more than knowing the right people. How is it that you stack up the claims to get the lenders to come to the table?
Well, we take a very thorough and involved approach. We sit down with the client multiple times and we go through their documents. I have multiple experts that I have look at the documents from the process of getting approved and applying for the loan to through the closing and then what happens afterwards. These experts are the best in their field. They take a great look at exactly what happened. They find what went wrong in the process, what went right in the process, and how things should have been done. And what I do is I take those results and I use them against the lender, because the lender, as I talked about before, was under a duty to perform these obligations.
Jesse, when you talk about stacking up all these experts and getting all these claims, this sounds a little bit too expensive for me. What people don't know, it's actually more expensive to move than it is to bring you in.
Well, it not only is it more expensive to move, but it's more expensive to sit there and do nothing, because people come in, even on these trial modifications that banks love to offer now, what's called these trial payments, these trial modifications. We'll do this for several months and see how it goes. There's no end to them, but at the end of the day, you're paying a portion of what you should have been paying. And all of a sudden, they kick you out of these trial modifications. You think everything's great, and you get a bill for $75,000. You think you're alone. I've seen that multiple times. It costs you a lot less to come talk to me, and trust me, it's nowhere near $75,000. But it costs
Cheap
a lot
date.
less to come to come to me and get this started in the beginning before all of this happens than just wait and see how it plays out.
I want to qualify that because it's such a big issue that I see as well. People will be in a trial modification on a mortgage payment that, let's say, was $3,000 a month. They'll set them up on a payment plan that's $1,200 or $1,500. They'll be in it for 6 months. And then, as Jesse says, at the end of that period of time, the difference between the $3,000 and the so-called, trial modification period gets stacked on the back end of the loan, and now they just re-enter the foreclosure process all over again with the person who owes even more than they did before. This is something that people do not see coming at them, and they really believe, that the lender just simply wants to help them and do what's in the best interest of the homeowner. Look, at the end of the day, they need to succeed financially. They're trying to make money. We're trying to keep you in the house. It is the contrasting difference, and Jesse can give you that information so you really know. When you think about the cost of his service, think about cheap rent. Think about the difference. If you got the modification, you could have that very thing happen. If you pay the same amount of money to Jesse, he'll get you a permanent modification, and he'll keep you in the house permanently. And that's a much more powerful strategy.
Very cool. Jesse, thanks for coming in. We always enjoy having you here. Now, I was in a meeting, gentlemen, this week, and something came up about real estate and, all the work I do with you fine on-air people. And he said, well, gosh, Kelly, with these people you hang out with every week, is the market really coming back? Because I was talking about how busy you all are. And I said, well, coming back is defined a little weird. People are making money. It's just very different, right, Derek?
That's very true. And we talk about the depreciation of homes and what we expect homes to do. That is a very general statistic. And when we bring clients into buying, whether investors or home buyers, we're bringing them to properties that have a chance to appreciate. I mean, there are properties in this market that do appreciate. I mean, believe it or not, there are. I mean, there are the distressed homes and buying right, where you're buying a property that is appreciating over the next couple of years. And that's something that the consumers need to understand, that this statistic of depreciation is a very general national term that doesn't apply to every individual home.
There's no average national temperature.
Exactly.
So how could there be
Precisely,
depreciation? So the thing that I want to ask you here, a lot in old days,
Mm-hmm.
we might have said, oh, there's property appreciating, great. So then can I flip? It's not flipping anymore. It's hold, ROI.
Right. Yep.
right?
Yep. So, I mean, and that's for a property investment or buying rental properties. I mean, that's a great example. I mean, when investors were buying properties 2, 3, 4, 5 years ago, they were buying it based on the simple fact that, well, geez, appreciation rates are at 12, 15%. I'm going to buy it, flip it in 6 months, or even homeowners. I'll buy this really expensive home. I know I can't afford it, but hey, worst case scenario, in 6 months I can sell it. I'll make $30,000. I mean, that was really the mentality, And from an investment side, now you have the right way of investing. I mean, you're buying a home or buying a rental property that is cash flowing. It's cash flowing. The values have come down to a point where we've got clients coming from Todd that know their situation, know what they can afford. They've gone through their budgets. Their savings have come back, and they're in a position where they can be placed in with an investor's home that they just bought or a rental property, and it's cash flowing. And you know that it's a reliable renter because they know the situation they're in. And that's the big thing. You see a lot of failures on rental properties. A lot of time it's simply because the renters thought they could afford a rent, and perhaps even their credit was look. I would rather have an individual with poor credit that truly understands their budget for a renter than an individual that has great credit that has no idea what they can spend. I truly believe that person with a great credit and has no idea what their budget is going to fail on that rental property sooner than someone with poor credit and understands their budget coming from Todd. That's an important aspect of any investment, is especially on the rental side, is who are the renters? Where are they coming from? Do they understand what they can afford? And that's what's really neat about this team that we've put together, that no matter what your situation is, we're going to help you. We're going to help you. And look, the American dream is to buy a home. At the end of the day, these people that come to Todd, at the end of the day is, look, we just want to be in a home, and if it's our home or if it's a rental property, we just want our family in a home. And this is a great opportunity for them to get into a better situation, whether it is a rental or contract for deed. And there's an investor on the backside understanding that, hey, these are qualified people. The credit might not be qualified, based on the standards, but as far as their understanding of their budget and what they can afford, they're qualified.
And it's interesting the way that this team does work together, because, Derek, when you talk about, okay, great, there's investor opportunities out there, rental properties will cash flow, but because of all the different situations that the three of you see every week, you are able to match these investors up with these people that want homes, correct?
Absolutely. And we talk about the contract for deed stuff. I mean, what an unbelievable opportunity for a someone that still wants to own their home, that have gone through a financial, that have put their budget together and they understand their options, to buy a home on contract for deed, an investor that is purchasing that home with the purpose of selling that on contract for deed. I mean, what a great matchup. I mean, it's such a rock solid deal, and we talked about this in a couple of shows ago. I mean, these individuals that are buying these houses on contract for deed, that's now their home again. So again, why wouldn't an investor want to do that? And why wouldn't a homeowner or someone that maybe was looking at a renter and say, well, yeah, if I can buy on a contract for deed, this is a great opportunity because I'm taking advantage of some of the owning real estate benefits. So again, those are things that we try to educate our clients, that we are here as a team to help you.
The multitudes of people who are out there who have been solid and stable their whole lives and now have gone through a storm like the home, upside down, what have you. These people are in abundance. These are not folks who were financial disasters in their past. These are people who never missed a payment in their entire lives prior to this. So these people are going to be looked at very differently than someone when you look at a credit report and you see 7 solid years of late payment history and the house was just another thing in a long line. So when someone comes to Derek and says, I want you to help me find a place, he can match them up with an investor who will buy that home. Very powerful situation. Not only that, remember, contract for deed, as he touched on, is looked in the eyes through the IRS as legitimate home ownership. You get to write off the interest on the payment that you make under a contract for deed. So if you've got a reasonably substantial income, you'd like to do a contract for deed because it affords you more money at the end of the year in a tax refund.
Right. And just to touch one last quick moment on that, that's one thing. We understand your value when you come to us, and we're not underwriting your credit. And when someone comes to us, we understand your value based on what Todd has given us on their budget, and that's a big thing.
He certifies them.
Absolutely, that's Todd certified. Exactly. I mean,
Todd certified.
It's true though. It's huge.
It's a big deal. So, Craig, do you have a shout out for us today?
Just want to thank Jesse one more time for coming. I mean, this is a tough time for a lot of families, and we believe that if a child loses a home, whether it's for a tornado or a hurricane or a foreclosure, it's still a child losing a home, and we owe families every legal, orderly process there is and at their means to save them and keep them together. Thank you for being here, Jesse.
Thank you for having me.
Cover your assets. Another week gone by. Many more families helped. You can be helped too all week long. 855-835-8500. That's 855-835-8500. Call us all week long and get some clarification on some of the things that might be going on in your life and that we talk about here each and every week. Have a great Saturday, everyone.